You're watching Don Gilded, where we don't chase the hype, we track the metal. Let's talk gold. Gold just had a crazy week, and if you're holding on to it, thinking it's your shiny safety net, you might be onto something. Let's break it down. Gold futures hit around 3,118 US dollars per ounce this week, with spot gold reaching about 3,085. That's flirting with all-time highs and making investors pay attention. In Canada, that's roughly 4,417 Canadian dollars per ounce. And in the UK, you're looking at about 76.64 pounds per gram. Not bad for a metal that just sits there and looks expensive. So what's driving this surge? One word: tariffs. President Trump dropped a 25% tariff on imported vehicles, sparking global trade fears. Investors didn't blink. They grabbed gold like it was the last flashlight during a blackout. Then, we've got the Federal Reserve, keeping interest rates steady, but not shutting down the idea of future cuts. And when rate cuts are even whispered, gold starts creeping up. Let's not forget our old friend inflation. Still hanging around, still eating away at purchasing power, and still making gold look like a smart place to park your money. And in the UK, some folks are selling their gold teeth just to cover bills. That's how high demand is. People are cashing in molars. You can't make this stuff up. Meanwhile, in Wales, miners just struck fresh gold at the historic Clogau St. David's mine. They're even planning to auction coins made from the new Welsh gold. That's some real-life treasure hunt energy right there. Now let's talk forecasts. Goldman Sachs raised their year-end prediction to $3,300 an ounce. FX Empire says we might even see 3,200 or more. Morningstar? Not so sure. They think gold could drop to 1820 in the long term if supply catches up to demand. Let's check in on the COT report, the commitments of traders. As of March 25th, speculators increased their long positions, betting gold prices will keep climbing. Commercial traders, big institutions and producers, adjusted their positions to hedge against risk. Translation: the smart money is still active, but cautious. So what's the long-term outlook? Bullish. Central banks are still buying, demand remains high, and global uncertainty? That's not going away anytime soon. Next week, all eyes are on PCE inflation data in the US. If it comes in hot, gold could spike again. If it cools off, we might see a little pullback.